Nestlé considering selling Nature's Bounty and other vitamin brands in a bold move that could reshape the health and wellness market. Nestlé is contemplating the sale of Nature's Bounty and other vitamin brands under its umbrella. This potential divestiture comes as part of CEO Laurent Freixe's strategic push to reignite growth for the world's largest packaged food company. But here's where it gets interesting. This decision isn't just about cutting losses. It's about doubling down on premium products that align with evolving consumer preferences. Could this be the beginning of a new era for Nestlé? Let's dive in. The Swiss giant, known for household staples like Nescafe coffee and Purina pet food, announced on Thursday that it's initiating a review of several underperforming assets within its vitamins, minerals, and supplements division. The goal? To streamline operations and focus resources on high-end offerings, such as Garden of Life and Solgar. These brands are not only growing in popularity, but also command higher price points, appealing to health-conscious consumers willing to invest in quality. Why is this shift so significant? For years, Nestlé has been a dominant player in the global food industry, but changing trends have forced even the most established companies to rethink their strategies. As people increasingly prioritize organic, natural, and scientifically backed products, businesses must adapt or risk falling behind. By considering the sale of lower-performing brands like Nature's Bounty, Nestlé signals its intent to stay ahead of the curve. And this is the part most people miss. It's not just about shedding non-core assets. It's about reinventing the brand portfolio to thrive in an ever-changing marketplace. However, not everyone agrees with this approach. Critics argue that selling off parts of the vitamins business could alienate loyal customers who rely on affordable options. Others believe that Nestlé risks losing valuable market share if competitors acquire these brands and revitalize them. What do you think? Is Nestlé making the right call by focusing solely on premium products? Or does this strategy overlook key segments of its audience? One thing is certain. The outcome of this review will have far-reaching implications, not just for Nestlé, but for the entire health and wellness sector. Will the company succeed in carving out a niche in the premium space, or will it face backlash from those who feel left behind? Share your thoughts in the comments below. Do you support Nestlé's pivot toward upscale products, or do you see potential pitfalls in abandoning more accessible brands? Nestlé Q2 earnings breakdown, growth, challenges, and future outlook. Warning sign for global markets. Nestlé's Q2 earnings call reveals a mixed bag of successes and struggles. Imagine being one of the world's largest food and beverage companies, yet facing unprecedented challenges in today's volatile market landscape. Welcome to Nestlé's Q2 earnings call, where growth and efficiency gains collide with foreign exchange headwinds and margin pressures. Unlock the full potential of your investment strategy. Discover how TipRanks Premium can supercharge your investing decisions with exclusive data, expert insights, and advanced tools now available at 50% off. http://lp.tiprank/July 2025/50off/coupon intro 50. Nestlé's Q2 earnings call navigating turbulent waters. The recent earnings call for Nestlé SA Reg Chess NSRGY presented a nuanced picture of notable achievements tempered by significant challenges. While the company boasted impressive organic growth and efficiency gains, it struggled with foreign exchange impacts, reduced margins, and a sluggish Greater China market. A closer look at the highlights. Organic growth, a silver lining. Nestlé achieved a 2.9% organic sales growth in H1 2025, driven by a 0.2% real internal growth, RIG, and 2.7% pricing increases. This broad-based growth spanned geographies and product categories, demonstrating the company's resilience in adverse market conditions. Fuel for Growth program, efficiency at its finest. The program yielded CHF 150 million in savings in H1, on track to deliver CHF 700 million for the full year. This will enable reinvestment and margin improvement, underscoring Nestlé's commitment to operational efficiency. North America, a beacon of hope. Despite a weak consumer environment, Nestlé delivered positive organic growth and RIG in North America, showcasing its strategic focus and market share gains in a challenging landscape. Coffee segment, the unsung hero. Nestlé's coffee segment thrived, driven by positive pricing and RIG. The company maintained positive RIG despite increased pricing, highlighting the strength of its coffee products in the market. But here's where it gets controversial. Foreign exchange movements, the unwelcome guest. The strengthening of the Swiss franc by 10% against the dollar severely impacted sales, particularly in Q2. Will Nestlé's financial performance continue to suffer from currency fluctuations? Greater China, the elephant in the room. Nestlé faced a negative RIG impact in Q2, prompting a strategic shift from driving distribution to stimulating consumer demand. Will this transition pay off, or will it exacerbate the company's challenges in this crucial market? Decreased margins and increased costs, a perfect storm. UTOP margins decreased by 90 basis points to 16.5%, primarily due to increased input costs and foreign exchange headwinds. Can Nestlé mitigate these pressures and maintain its margin target for the year? Free cash flow concerns? A red flag for investors. The company's free cash flow halved in high in I2, driven by lower margins and higher working capital needs. How will Nestlé balance its dividend payouts with the need to maintain a healthy balance sheet? Forward-looking guidance. Cautious optimism. Nestlé maintained its guidance for the year, anticipating a 2.9% organic sales growth. However, the company expects a lower UTOP margin in H2 due to increased tariffs and input costs. Will Nestlé successfully navigate these challenges and meet its full-year margin target? The verdict. Nestlé's earnings call presents a complex narrative of growth, efficiency, and challenges. As investors and market watchers, we want to hear from you. Do you think Nestlé will overcome its challenges in Greater China? How do you foresee the company addressing its margin pressures and free cash flow concerns? Share your thoughts and predictions in the comments below. Disclaimer and disclosure, http://www.tipranks.com/disclaimer disclosure. Report and issue, http://www.tipranks.com/contact editor.